People may think that technicals is all you need to become profitable in trading, but they're wrong. In today's video, I'm going to be going over the exact principles that turned hundreds of traders from unprofitable to profitable using this one simple trick. This is called the mental game of trading. And I'm sure you guys have heard psychological aspects of trading and how this impacts our performance, but most people underestimate the severity of how it impacts our performance. And our mental can be just as important as our technicals, especially once we've mastered the technicals. So I'm going to be going over exactly what happens when we trade. What happens to our mind when we're actually in the markets trading? So our brain goes into what's called fight or flight, which I'm sure you guys have heard one way or another when you're trading or just in life in general. Your brain goes into fight or flight, meaning that you're not thinking rationally, you're not thinking logically, and you're thinking based upon your survivalistic instincts. So as you guys can see over here, this is our part of the brain that's responsible for our survivalistic instincts or our irrational brain. Next, we have the emotional state where we're thinking based upon our emotions, based upon how we're feeling in that moment. Now we have our executive state or our logical brain where we're thinking logically, we're thinking rationally, we're thinking based upon our past experience, our logic, and our analytical abilities. This is where you want to be sitting while trading to make the most logical decisions, which I'll be teaching you guys exactly how to master in today's video. So the first part of the brain that I'm going to be going over in today's video is logic. This is something you need to understand to be able to trade logically and rationally in the markets, which is something you need. You do not want to be trading based upon emotions. You want to be trading based upon logic, your experience, your rational thinking, and your ability to execute in the markets effectively. And as you guys can see displayed by this image that I have provided here, this is the brain functions by lobe. So as you guys can see, the frontal lobe is the part of the brain responsible for your problem solving, your judgment, inhibition, personality, emotional traits, language production, and motor planning. All of these are things that you use in trading, especially problem solving and judgment. When you're problem solving, you're understanding exactly the size you're going to take on a trade, your stop loss, your take profit, your entry, your exit, etc. There's so many things that we use with our frontal lobe when we're trading and when we're thinking logically. Problem solving being the biggest and judgment being also there as well. You're judging based upon high quality of a setup is this. What should my risk be on this trade? Where are my take profits, etc.? There's so many things that the frontal lobe is responsible for. Now, you might be asking yourself, what actually happens when I'm trading logically, not emotionally or irrationally? First of all, you're following your plan. You're going into the pre-market, understanding exactly what you're looking for coming into the day, so you're able to follow your plan and execute upon these positions with high quality context and logic. When you're thinking logically, you're defining your pre-market game plan, what names you're going to be trading, where you're entering. You're able to follow your plan much more effectively rather than trading emotionally or irrationally. Second of all, you have better risk management. You understand exactly where you're going to place your stop loss, where you're going to get out of the trade. You understand where you're invalidated and you're not supposed to be in the trade. The risk management part is also an extremely important topic that I'll be going over in a future video. So be sure to subscribe if you want to see that video as well. And able to understand your risk better, you're knowing how much you're risking on a certain trade. You're not over leveraging, a huge problem in most traders experience while trading. You over leverage because you're not thinking rationally. You're thinking based upon profits. You want to make money now. You don't want to be patient and wait for the profits to come to you. You're looking for the money very quickly. You're not actually thinking logically based upon what your risk parameters should be, what your max loss per day is. You also are able to get very precise entries. When you're thinking logically, you know exactly where the position that you're entering is and where your entry is going to be placed at. As you guys can see in this example here, I trade the break and retest. So we have this clear high here. We break above the retest. You're thinking logically that previous highs are typically held statistically, so your entry is right here. Once this shows strength, you're in the position looking for continuation towards the upside. You're getting much more precise entries, looking to enter a trade just based upon your profits. You're not entering here where it just goes up. You're entering just because it's showing strength and then it just rejects and falls towards the downside. Typically happens when you're thinking irrationally, not logically. Understanding the context of the trade, how high quality it is, what the risk management on that trade is. Once again, you're able to get these precise entries and will also improve your risk management and while you're following your plan in the pre-market that you already established. And as I've already mentioned, you have more defined targets. Following your plan in the pre-market, understanding the levels of liquidity that you're going to be targeting allows you to have these defined targets coming into the day. And then when it actually becomes time to execute, you're able to think logically, thinking, oh, I had this marked out in my pre-market game plan. I'm following my plan. I'm thinking logically. where is the most precise entry that I could get? How am I going to manage this trade? Where are my targets? And exactly what levels of liquidity have the most prominence? Where are these levels of liquidity most valuable? As you guys can see here, an all-time highs level, like I just showed here, this could be your all-time highs, would be much more of a logical level to target today when you're actually trading, because all-time highs is a level that all traders are looking at when we're trading up and towards that level as a trader. You're looking for the all-time highs, so you're able to think logically, and you're able to define your targets much better. You're having more defined targets. Finally, you're able to have a higher win rate / R multiple. This also comes obviously with your better risk management, following your plan, more precise entries, defined targets. This obviously comes with that, a higher win rate and a higher R multiple. You're risking less and making more on every single trade because you're following all these 5 rules here. So this is obviously what's going to lead to you becoming profitable. But don't think upon profitability or profits or money or anything else that you're looking for in trading. Focus on becoming process oriented. Think logically. Think based upon your risk management, your entries, your exits, your targets, your plan, etc. You might be asking yourself, what does this actually lead to in my trading career? So as you guys can see, these are my stats for the month of August. I have an 83% win rate so far, an 80% day win percentage, a 1.37 R multiple, meaning that every $100 that I risk, I'm making $137 of profit. So I'd like to increase this as the month goes on. But with the high win rate that I do have, currently sitting at 83%, a 1.37 R multiple makes me extremely profitable for the month and allowing me to catch a very nice August move so far. Now, for the next part of the brain that we need to discuss and understand is your emotional part of your brain, where you're not thinking based upon logic, but you're basing your thoughts and actions based upon how you're feeling in the moment and what your emotions are during that time. So as you guys can see displayed by this image here, this is your limbic system, aka your emotional part of your brain. This is responsible for your pleasure response, social bonding, motivation, reward-seeking behavior, fear response, memory formation, fight or flight response, and appetite and sleep. So as you guys can see, this is responsible for things unrelated to trading that you should not let interfere with your decision making, and your logical based decisions that you should be making should not come from the limbic system or the emotional part of your brain. Now, what happens when you trade emotionally? You execute your trades based upon feeling. This is obviously not something you want to be executing upon. You want to be thinking on logic. You're thinking, oh, this is a break and retest. I feel like this will go up, even though I didn't wait for the strong price action. It's consolidating, and then it drops. And now you're fearful, and you're like, oh, I'm not going to respect my stop loss. I'm just going to let it ride all the way down until you've lost your entire account. And this is what happens when you think emotionally. You're not thinking logically. You're thinking based upon how you feel. Oh, I think it'll go up. Oh, I feel like it might go up eventually. No. You're supposed to think logically, and this is why you execute based upon logic, not feeling. Another reason you should not think emotionally, and what exactly happens when you think emotionally, is risk is dependent on emotions rather than logic. Like I mentioned previously in that little example that I made there, you're looking for the break and retest. You enter here when it's not even your setup. You didn't even see the strong price action. It drops, and now you're fearful. You're thinking based upon how you feel, and you're trading emotionally. You see this drop below your stop loss. Your stop loss is at these lows right here, and you did not stop out of the trade. Now you're sitting in this trade hoping, I see some strength here, it might go back up, and it drops more. And now you've lost $800 on this trade when you were looking to risk only $50. You've blown up your entire account nearly, and now you're in a state of panic. You don't know what to do, and you're not making logical decisions. You're thinking now based upon fear. You're not thinking based upon the technicals where you should have gotten stopped out here. Now you're thinking, oh, it should go back up. My stop loss did get hit, but I don't want to lose this money. I can't lose this money. I need to prove this to my family. I need to prove this to my friends. I told everybody I'd become profitable. When you think like this, you're now reinforcing bad behavior. You're going to blow up your account eventually, such as this example. And some people might even get rewarded for this. Some people might see their setup break and retest. They enter early, they're not even trading their system, and they get rewarded. They get the profits. They make $100. But again, displayed here, when you're trading emotionally, you're going to build bad habits and you're going to end up blowing your entire account. Now, your entries also become way less precise, completely opposite to our logical example where your entries become more precise. Now your entries are way less precise. You're entering the trade again based upon feeling, not actually logic. You're thinking, it came to my level, it's not really showing strength, but I'm going to enter anyway, and you end up getting stopped out. You're not following your rules. You're not trading a process-based system. You're thinking, oh, I feel like this will go up. I feel like this will happen. I feel like it'll hit my profit target. I really want this to hit my profit target. I want to make money. I want to prove this to whoever. You should not be thinking like this, and your entries become way less precise, which will also lead to you having way more undefined targets. Your targets now become, oh, I feel like I want to make way more money. I want to make more money. My target should be here at high of day, but I'm going to target all the way up here because, I don't know, I feel like I should be making more money. I should be paid for my time. I'm spending so much time in front of the screens. If I'm going to make money, I'm going to make the home run. I'm not going to settle for a little bit of profit. I'm not going to settle for my predefined risk management plan. I'm not going to stick to my plan. I want to make as much money as possible. So I'm going to target this high right here, making, instead of $100, I'm making $500. And when you enter this trade right here, your target does get hit. Your high of day target does get hit. But then we break above, we reject, and we've come back down and stopped you out right below your stop loss. If you even follow that stop loss, because you're thinking emotionally, you might just end up blowing your account because you're even more frustrated that your original target up here did not end up getting hit. And now the final thing that this leads to in your trading is obviously a lower win rate and a lower R multiple, which are the two most important things that you can ever have in your trading. Having a higher win rate and a higher R multiple leads to the profits. Most people think, oh, I just want to make the money. They're only focused on this. But trading logically, trading without emotions, and trading process-oriented systems is what leads to the money. People don't understand this. They think, oh, I just want to trade because I want to make quick money. And these are the type of people that are also the ones who are super lazy and end up not making any money because they're like, oh, I just want to make money. I don't want to focus on my emotional trading or learn about psychology or focus on a process-oriented system. I just want to make the money. And these are the type of people that are not going to become profitable. Now, this might be pretty obvious, but what does this lead to in my trading? This will obviously lead to a lower P&L curve. As you guys can see here, a 25% win rate, a 0.93 risk to reward ratio, meaning that for every $100 that you risk, you're only making $93 back. So this is not a spot you want to be in. You want to have at least above a 1 risk to reward ratio, and you want to have at least above a 50% win rate in order to become profitable and sustainable in the long term. There's obviously outliers where you can have a 20% win rate like this still, but have a 4.0 R multiple where you're still very profitable because the statistics allow you to become profitable with this lower win rate. But again, for my strategy, I'm aiming for above a 50% win rate and above a 2R multiple over a long period of time. Now, for the final part of the brain that I'm going to be going over in today's video is the fight or flight response that is responsible for our survival instincts. So the fight or flight response, where you're prioritizing your survival functions, such as your heart beating faster to breathe in more oxygen, which is important when you need to run away or fight. But this is not important when you're trading. Your brain doesn't know the distinction between the logical part of the brain that we need for trading and your emotional part of the brain where you're thinking on a survival-based state. Your brain just thinks, oh, I don't feel safe. I'm not going to make money. I won't have social status. I won't become profitable. Everyone will hate me. And this is how your brain is thinking. Your brain is thinking like this. Instead of thinking logically, thinking, oh, this is part of the system. I'm just going to enter here because this is within my system oriented, because we're thinking with our survival brain. Our heart beats faster because in the wild, 100,000 years ago, we didn't care about making a decision on whether our stock is going to go up or down. We cared more about surviving, fighting, or running away, which is more important than your brain perceives as trading. Now, I'm going to be going over some example scenarios that might actually happen to you when trading in the markets and how your brain responds to these scenarios naturally. So, scenario number 1, you're looking for the break and retest, which is obviously within my system. You get your strong price action candle here and you enter the trade, right? You're thinking logically here and you're looking for continuation towards the upside. And as you can see right here, once you entered the trade, you did have to sit through some consolidation. And on this candle right here, your brain is thinking, oh no, it's approaching my stop loss. I'm going to get stopped out. I'm going to lose money. I might as well just exit the trade right here and avoid losing more money. So you take a $40 loss instead of losing $100 at your stop loss. And this is what your brain's thinking. You're not following your plan. You're thinking based upon your survival instincts because you don't feel safe. You don't feel in control, and you're thinking, oh, I'm beating the market. I'm not going to exit based upon my actual predefined risk where I should be exiting the trade when I'm wrong. I'm going to exit a little early because I don't want to lose as much money. And as you guys can see right here, you exited right here, right before the move ended up happening. Had you just followed your predefined risk management plan, you would have caught this very nice trade towards the upside, where you had your nice entry and you had your predefined targets towards the upside. But instead, you thought illogically, you exited on this candle because you thought you were saving money. And instead of that, you ended up losing out on making $200 and you ended up losing $40 for the day because you didn't follow your risk management plan. This is why this is the most important topic to be discussing in trading, alongside technicals, psychological, and emotional barriers is what will prevent you from becoming profitable in the long term. So you might be asking yourself, why does this happen to me? Why does my brain think like this? It's because we don't feel safe. We don't feel like we're secure. We don't feel in control. Humans like feeling physically safe. We like feeling in control. We like knowing a predetermined outcome. That's why people like safe jobs like doctors, lawyers, etc. People like knowing that they have a guaranteed income and they actually want to feel physically safe, knowing that they have food to provide for themselves and they feel like they're actually providing to a society where they're able to get a predetermined income. This is not something that we have the luxury of having in trading because our money is determined based upon our logical decision making, not based upon our paycheck that we get every single week. Also, like I previously mentioned, our job security, we don't feel safe in trading typically because our security of our job, we don't actually feel like we're secure. We don't feel like we're actually able to get a predetermined income, but which we're not. We're not able to get a guaranteed income every single day. We're also able to get much more freedom. We're paid based upon our logical decisions, not based upon how many hours we're working, which is also another downfall of traders. We think we're paid based upon an hourly rate, which is taught to us at an early age that we get paid based upon an hourly rate. We're paid for our time. In trading, you're not paid for your time. You're paid for your decision making, your logical decisions, how you're reacting to certain situations, how you're able to actually control your emotions will determine how much money that you actually do make. Because our brain likes guaranteed results. We like knowing exactly what's going to happen and when it's going to happen. We like knowing when our paycheck comes in. We like knowing that the trade will go up no matter what if we enter based upon our setup and our system. But that's not always the case. You can enter based upon your system and this trade can still end up stopping you out. We don't like knowing that there's a undetermined outcome that we can't control. We're able to control our emotions and our decision making, but we cannot control the outcome, and our brain does not like that. We do not like unguaranteed results. And this probability board perfectly displays exactly why our brain does not completely grasp trading, especially at the beginning. Because as you can see on this probability line here, a 1 in 6 chance on a dice roll, your brain might think, if I roll this dice 6 times, I will guaranteed get one roll that lands on 6. But that is not always the case. Chances of rolling a 6 is equally likely every single time you roll the dice. Just because you roll it 6 times does not mean you have to land on 6 no matter what. You can land on 2 one time, 3 the next time, 4 the next time, etc. And you don't have to land on 6 until, let's say, the 13th roll. But our brain doesn't like this. We think based upon a 1 in 6 chance, a 16% chance, within 6 rolls, I should be making money. I should be getting a 6 on the dice roll. That's not how probabilities work. Our brain likes these certain results, a one-time 100% guarantee, such as a paycheck or financial security. Now that you know that our brain does not like guaranteed results, you might be asking yourself, what exactly happens when I lose a trade? So first of all, your irrational brain kicks on. You're no longer thinking as logically as before. If you even take a logical setup beforehand, you're taking a trade within your system. Now you don't feel safe. Now you don't think that you're going to be able to become profitable. And now you think, oh shoot, I need to make this money back. I really need to make this money back. I can't afford to lose this money. Whatever the situation may be, your irrational brain ends up kicking on. And once your irrational brain kicks on, you have a higher chance of taking a low probability trade. You've lost this trade now. Let's say you're down $100 for the day. You ended up losing that trade. You're upset about it. Now you're thinking, how can I make this $100 back? How am I able to make this money back in, let's say, another trade? And this could just be a low probability day, but you're looking, let's say, on another stock or a ticker, and you're looking for this trade, right? You see this setup presenting yourself. You're like, I'm just going to enter early because I want to make this $100 back. That's not how this works. You entered the position here, and then you ended up getting stopped out again. Now you're down $250 for the day because let's say you were risking more on the second trade, looking to make this original $100 back. Now you're really panicking, and this is where you might go way more downhill. Some people might look at this $250. This was my rent money. This was potentially part of my income. How am I going to now pay for rent or put food on the table? And this is exactly why you don't trade with money that you can't afford to lose. These people now see this $250 and they're like, oh no, I really have to make the money back. Now I'm going to be looking for any trade I can get. If I see this trade, I'm just entering the trade based upon what I see. And sometimes it'll just chop around and you might even make money on this trade, reinforcing a bad behavior. Let's say now you're only down $120 for the day. You've still ended the day down $120. You've now reinforced a bad habit and you've lost money for the day without following your plan, your risk management, and your logical thinking that you should be following every single day, because now you've made money without following your plan. And now you're going to most likely do that in the future, which can lead to you entirely blowing up your account, losing your entire, let's say, $1,000 account. It can be all gone in a single day on a multitude of bad decisions made in a row. Now, I'm going to be giving you guys the exact step-by-step process that you can follow to avoid all of these mistakes that I just mentioned in this video. So first, you need to master the mental game before the market even opens. Have a written trading plan. Set daily loss limits. Pre-market mental check and pause before clicking. Having a written trading plan before the market even opens, I can't even tell you guys how important this is. Having your trades written down, where you're looking for your entries on the specific names that you're watching for that day, and exactly your predefined risk and your targets, helps you make much more logical decisions, and you're able to think based upon logic, not emotion or irrational thoughts. Also, setting a daily loss limit will allow you to avoid what I just mentioned previously, where you take a multitude of losses and you're risking more and more every time until you just eventually blow up your account or reinforce a bad behavior. Let's say your max loss per day for a $1,000 account would be $150. Let's just say you're risking a lot on that account and you're looking for a $150 max loss per day. You've now lost, let's say, $150 for the day. Now you're looking to just stop trading for the day. This helps you avoid irrational thought. If you over leverage on a position or you've just taken a low quality trade and you let it run a little bit past your stop loss, you're setting a daily loss limit to protect your $1,000. You're not going to lose this full $1,000 in a single day. You've only lost $150. Sure, it's a pretty big setback. That's your max daily loss that you can lose in a single day. But this is much better than blowing your entire $1,000, which is potentially money that you either can't lose or can't replenish for a long time. Longevity in the markets is extremely important. Without being in the game for a long period of time, this isn't possible. You won't become profitable. The more days and hours and trades that you can take, the more likely you are to become profitable with the experience that you do get. And the final topic I want to be going over in today's video is controlling your emotional highs and lows. As I mentioned previously in that example, wins can just be as dangerous as losses. Winning tells us traders that we're doing something right, but that's not always the case. When breaking your rules and not following your system results in a win, that's a positive reinforcement to keep on breaking your rules. You've now made money back. Let's say that $250 you were down on for the day, you ended up making $500 because you risked your entire $1,000 or $5,000 account. You've risked $500 and now you've made, let's say, $500 back. So you had a 1-to-1 risk to reward. You've now reinforced a bad behavior. You're trading not based upon your system. You're trading a low quality setup just because you wanted to make this money back. That's not how you become profitable in the long term. And now you're reinforcing wins as a good thing. You're not following your system and you're reinforcing that by now winning $500 for the day. And you're reinforcing that in your mind that you shouldn't follow your system, that you should not be following your risk management or your entry criteria or your profit taking criteria. And this is an extremely overlooked part of trading that keeps traders from becoming profitable, is this positive reinforcement that causes traders to look based upon profits and not process. And I really hope you guys enjoyed today's video. And if you did, be sure to leave a like and subscribe. And I'll see you guys every single Wednesday with a brand new video.